What's up, guys? Welcome to another investing video, and in this video I'm going to be talking about one of the terms that I mentioned in a previous video, which is the VWAP. Very cool sounding name. I think so anyway, although it's not very exciting. So hopefully by this stage you've watched at least some of my previous videos where I talked about how you can process the information on the that's quoted for shares, and you also understand why the share market exists and how it actually functions. That knowledge is relevant for this video, so I do recommend that you go back and watch those videos if you haven't. But let's talk about the VWAP. So the VWAP stands for the volume weighted, I apologize in advance for my terrible handwriting, average price. I told you it was a boring name. VWAP sounded a lot better, didn't it? So basically, what this does is pretty much exactly what the name suggests. It takes an average based on volume. So if you looked at some transactions for shares, so let's say that you have a stock that trades at $9.98, $10, and $10.02. Hopefully, basic mathematics would tell you that the average of these three numbers is 10. Okay? If you want to actually calculate it, you would say 998 plus 10 plus 1002 divided by 3 gives you 30 divided by 3 is 10. But hopefully mathematically, or just looking at it, you can tell that this is 0.02 over, 0.02 under, the average is 10. But what about a volume-weighted average price? Well, let's say that there were 400 shares that traded at $9.98. Let's say there was 100 shares that traded at $10 and 100 shares that traded at $10.02. What would be the volume-weighted average price? Now, hopefully you can see, again, just by looking at this, that the VWAP would be below 10 because of this 400. Okay, it looks like a 1 now, but because of that 400. Okay. Now, the way you actually calculate the VWAP, and I'm going to bore you guys a little bit here, so don't get too caught up in the mathematics. But just in case you wanted to know, since this is a video about explaining it, it is the sum. So this is sigma. It's just a symbol that means sum. Volume times price divided by volume. I told you my handwriting was horrible. So if you actually wanted to calculate this, and again, I'm just going to do this very quickly because I know it is boring as anything, you would end up with this formula, which would get you 600. This would be, bear with me a moment, so 3992, I think. This would be 1,000. It's pretty straightforward. This would be 1,002. So you would actually end up with, what's that, 5,994. So 5,994 divided by 600 should give you, if I'm correct, $9.99. Okay? If it's wrong, I apologize, but that is the VWAP. Now, the reason why it's lower is, again, because of this 400 compared to 100 and 100. So it's basically an average, but it factors in how the volume, exactly as the name implies. Now, as I said in a previous video, well, this is all well and good, but why do we care? I mean, why do we actually care about the VWAP in share trading? There's really only one main time that this actually comes up, and that is with an equity raising. So, as I explained in a previous video, one of the core function of why the share market actually exists is for a means for companies to raise capital, to raise money. They can do that through an IPO, but then once they're listed, if shares bought and sold, which they are all day, every day, the company doesn't actually see that money because it's going from one investor to another. But what happens if a company actually wants to raise more money? Well, they can do that with an equity raising.